Hello everyone, welcome to Bald Guy Money. I am Bald Guy, and for the last month, I've seen this narrative kicking around Twitter, and what it is in a nutshell is people are saying that investors are leaving gold and moving to Bitcoin. Even famous gold bug and Bitcoin hater Peter Schiff blamed bad gold miner performance recently on cash outflows from miners moving into Bitcoin. And although I admit that some correlation between the two exists, I've covered it here on the channel before, in my opinion, people calling for gold to be replaced by Bitcoin are speaking a bit prematurely, especially considering the fact that we just closed the week at a nominal, so not adjusted for inflation, all-time high for a weekly closing price on gold. And considering all of the contradicting narratives out there, in this video, I want to discuss what's driving this new nominal all-time high closing price for gold. Then I want to touch on what this means for gold moving forward in March, April, and through to the end of the year. And before we get to the viewer question for this episode, I want to touch on Bitcoin. Is it really the anti-gold? Is it the enemy of gold? And is it sucking money away from gold like so many people on Twitter are saying it is? And I promise you will not want to miss that part of the video. Now, before we get into it, if you're in the USA and want to buy gold or silver from a reputable dealer at a great price, please check out channel partner Pimbex. With gold making new closing highs, I really think the best deal on their site right now is the silver maple leaf coin shown here, which you can easily get for under $26 a piece if you buy 25 or more. I'll leave the link to this deal in the description below, and for those of you interested in gold or silver IRAs, give them a call at the number on the screen for a free consultation. Just please tell them you came from the Bald Guy Money channel. So, as I already mentioned, gold is moving higher, and there are some things happening in the background right now that are driving the price of gold to higher levels. Now, the mainstream narrative being fed to people who believe everything they read and hear is that weak manufacturing and consumer sentiment data has sparked concerns that the economy might not be exactly as strong as it seemed it was. As a result of that, there are renewed hopes amongst some investors that we may see an interest rate cut sooner than expected, which drove Treasury yields down and the US dollar down with it. But as you could probably sense from the heavy level of sarcasm in my voice, I'm calling BS on this one, because in my weekly Patreon newsletters, I have been talking about the CME Fed Watch tool. Some of you may have heard about that before. And that is the tool that predicts the Federal Reserve's next moves with respect to interest rate decisions. And from what I can see, stories about the market's expectation that the Federal Reserve will cut rates sooner as a result of the latest economic data are completely false. In fact, from what I can see, expectations remain relatively unchanged versus where they were just at the start of last week. So how do I know that? How am I reading this image that you're seeing on the screen right now? Well, I know because the expectation shown here for one rate cut in May went from 19.2% last Monday down to 18% today. And expectations that they'll hold rates went up from 80.4% to 81.4%. What's more, if we look at June, magical June, when the Fed is going to make everything better, that's what everybody is talking about right now. Expectations that the Fed will hold rates are also slightly higher now at 36.7% versus only 34.1% back last Monday. And I'll give you all a second to take a look at this. You can even screenshot it if you want to check it in detail later. But while you're checking this data out, let me say that you cannot believe the flimsy narratives that are being spun in the mainstream media, because it is a distraction. And what they are trying to distract you from is this. With the Federal Reserve's Bank Term Funding Program set to end on March 11th, I think the market is reacting to concerns about the health of the banking sector and the economy at large. Even Jaime Dimon, who recently sold a large amount of his JP Morgan stocks as per SEC filings, is publicly saying before any crash it felt great and that he sees a recession on the way. And he's not alone. Other major market movers, other billionaires, other big players in the market are selling stocks as retail investors continue to pile in, thinking that the numbers are only going up from here. All of this on the backdrop of yet another U.S. bank, New York Community Bank, struggling, with investors and depositors alike scrambling to get out before it fails. And as you can see here, the stock for that bank has dropped more than 40% over the last month and more than 60% year to date. And that's the real reason I think gold moved the way it did on Friday, and why some investors may be thinking the Fed will have to act sooner rather than later. In turn, this is driving gold prices up, as well as miners. They were up nearly 4% on the week as the market starts to price in further upside on the price of precious metals. And that ties in well with this next part, where I'd like to introduce you all to the sponsor of this video, CLLXF Mines Incorporated. They are a junior exploration company out of Canada operating in the Flin Flon district of Manitoba, which to begin with is a very stable jurisdiction, and I know many of you have been asking for me to cover miners in stable countries where nationalization of the mineral properties isn't a big risk. Their projects are mineralized with gold, silver, copper, and zinc, which make this a fantastically diversified mining area for those of you who value that. Now, getting down to brass tacks, CLLXF currently has a market cap of only $16 million. And like other mining stocks, it's been beaten down lately, trading at below $1 per share today versus its 52-week high of $3.54 per share from April of last year. But considering the fact that they're operating with zero debt and more than 60% of the shares are held by insiders and institutional investors, many of whom are patiently holding the stock to see the company's vision play out, CLLXF Mines has the potential to take advantage of market dynamics once the metals bull market gets into full swing. Especially when you factor in their cooperation with Hall of Fame geologist Mike Musilowski in the mining-friendly mineral-rich area. So if you're interested in investing in this project or getting to know more about it, check out their website at www.cllx.ca or look them up under their ticker, which for my American viewers is CLLXF on the OTC market and on the TSX Venture Exchange at CNX. And before we move on, I just want to give a big thanks to CLLXF Mines for sponsoring this video and supporting the Bald Guy Money channel. I would not be able to do what I do here without sponsors like them. Big thanks to you guys. And now back to the video. So I've already talked about reaching a new high on the price of gold. And remember everybody, that is a new high with respect to a weekly close. And of course, that is not inflation adjusted. But what does this mean for gold moving forward? Well, the first thing, and building on something I've said recently in a video, is that the market is making a very good case for the $2,000 per ounce price level being a credible price floor for gold right now. Especially considering that the average closing price is moving well above $2,000 right now. It's not like we're just barely above it or barely just, scraping above $2,000. You can see the average closing price for gold right here on the screen, which is $2,030 an ounce so far into 2024. But more importantly, we are seeing continued momentum in gold's trend upward, with this year being the 5th year in a row where gold's average closing price is moving in the upward direction. And what's most notable about this move on gold is that it remains strong despite the US dollar index stubbornly remaining above 100. But once the wheels start to fall off, and I'm not saying it's going to be as bad as it was in the 2008 crash, but we will see weakness in the US dollar moving forward. It will move below 100 and stay there for some time. And when that happens is when gold is really going to start to move up. Just like we saw in the early 2000s when the US dollar index was at 104, so more or less at the level it is today, and dropped all the way down to 81 in the aftermath of the financial crisis, which is a period from 2003 to 2011, where we saw the price of gold increase by a factor of 4.5x, going from $360 an ounce all the way up to $1,613 an ounce over an 8-year period. So yes, I remain bullish on gold, and I think there are some fantastic signs that I've just presented you in this video that support my logic for remaining bullish on gold. That said, I know some people are beginning to wonder, will Bitcoin kill gold's growth momentum? And I say this as a person who owns gold, who owns silver, and who owns Bitcoin, as you can see from this September 2022 tweet where I said freedom is gold and silver in a safe, owning your own home with a bit of land, and having some Bitcoin in a cold storage wallet. And if you're wondering, Bitcoin was just under $20,000 when I tweeted that, so I am not hopping on the bandwagon here. I have been a long-term bull on Bitcoin just as I am on gold and silver. And let me just take a moment right here to say that realizing you don't have to choose between them, that you can actually have both the analog and the digital forms of financial system insurance, whatever it is you want to call gold and Bitcoin. When you realize that you can actually own them both, you don't have to pick sides, that is the moment you'll really start to feel confident about your financial situation. At least that's how I feel and that's how I see things. And I'll let all the haters leave their comments on that topic now. Don't worry, it won't make me mad because my entire crypto portfolio has done a 4x since January 2023, and no insult you can put in the comments can change that fact, so take your best shot. So, getting back to business, do I believe the Bitcoin maximalists when they say that Bitcoin is going to end gold, it's going to flip its market cap and suck money away from gold? In short, the answer is complicated. Although I believe there may have been some portfolio adjustments since the launch of the Bitcoin ETF that took money away from gold ETFs and shifted that money into Bitcoin, I believe that is a short-term portfolio realignment. It's way too early to call this a long-term trend, and gold has 5,000 years as a wealth storage vehicle backing it up, along with status as a tier 1 asset, and central banks are buying it like it's going out of style. Yes, as we move into a more and more digital world, Bitcoin could become the preferred wealth storage vehicle, or maybe not. Only time will tell. I don't have the right answer today. But gold's price has in fact increased since the Bitcoin ETF was launched from around $2,020 per ounce, now up to above $2,080 per ounce where we're at today. Now, just before I finish this topic and move on to the viewer question, what I want to say is happening right now in the market is it's not gold versus Bitcoin, so don't believe that narrative. It's us against fiat currency. It's us against inflation. It's us against irresponsible governments. And I expect cash to continue to flow in the direction of both gold and Bitcoin moving forward. And what I want to say is that I'm very happy that I own both of them. Okay, with that said, it's time for this video's viewer question, as I do in every one of my videos. And in my last video, Sarge, hey Sarge, you're a longtime viewer. I'm very happy to be answering your question in this video. Sarge asked me why I am not saying to stack silver over gold right now, considering the gold to silver ratio. So that's a great question, and how I will answer it is like this. At the start of the video, I presented silver maples from Pimbex as the best deal I think they have on their website right now. So obviously I am still stacking silver, and I can even see the ratio realistically coming back to 60-1 in the next few years. And believe me, I wouldn't have been showing those silver maples at the beginning of the video if I wasn't still buying silver myself. And everybody on my Patreon will know exactly what kind of silver I've been buying lately. But I've mentioned it even here on the YouTube channel. I've been buying silver Philharmonikers because those are the coins I've been getting really good prices on myself. But at this stage in the game, for me at least, my strategy has shifted more to wealth preservation than growth. And that's why I'm stacking more gold versus silver than I used to. So for example, back in 2011, 2012, 2013, I might have been stacking at a 40-1 ratio where for every 40 ounces of silver I would buy 1 ounce of gold. Now, today, for every 1 ounce of gold I'm buying, I'm probably getting around 20 to 25 ounces of silver. And to tie this in a bit with something that we've talked about already in this video, a portion of that money, even a portion of the money that I would have probably spent on gold back in 2011, 2012, and 2013, I have diverted to Bitcoin. And I don't regret that decision at all because Bitcoin has performed very well as of late. So just to sum it all up for you, Sarge, I am focusing more on gold these days myself because my strategy has changed a little bit and I want a little bit less exposure to volatility in metals, which is kind of associated with silver, less associated with gold. But I continue to stack silver. And I remain convinced that the price has potential to grow in line with targets I've presented right here on the channel. Otherwise, I wouldn't be buying silver myself. And with that said, that's it for this video. I thank you all for taking the time to watch it. Please leave a like if you liked this content. Share it with friends and family if you think other people need to see it. Remember to subscribe. And before I sign off, as I end all my videos, I would like to just tell you all to take care of yourselves and take care of each other. See you in the next video, everybody. Goodbye.